Let's welcome in our next guest, Jyotivardhan Jaipuria, founder and CEO at Veda Investment Managers Private Limited. Jyoti, are you surprised by the recent move globally? Do you think it's just a liquidity-based rally and it'll be difficult for fundamentals to catch up with such sort of a fast move?
Yeah, I would say I'm a little surprised that we got such a strong rally after Brexit, because my feeling was that because Brexit was not really expected, the market would remain a little subdued for some time. But I think the markets have really bounced very, very strongly and come through, and we are now at higher levels than where we were just before the Brexit.
Right. So how would you look at it? It's just the flows which are taking the markets higher? I think we just had some issue with that link. We'll just connect it back. Meanwhile, again, if you just look at what's gaining, what's losing as far as NIFTY is concerned. So let's just look at the top trades on NIFTY. If I look at the Nifty 50 pack, Dr. Reddy's is up about 2.5%, BHEL is up 2.5%, 131, ITC is up about 2.3%. Tata Steel is up 2.1%, 329. Bharti Infratel is up 2%, 352. Bharti Infratel has had a very good move from the Brexit lows of 311. Tata Motors DVR is up back to the 300 levels. Ultratech is doing well, 3,463. BPCL, Axis Bank are some of the other gainers. Tata Power, GAIL, Lupin are some of the other names that are buzzing in trade right now. Top losers, TCS, 2,529, but again, from the Merrill Lynch trade downgrade, I think it's not done anything. So it was around the 2,500 mark, 2,540, and that's precisely where it is. HUL is down about 1%. Asian Paints is looking in on the lower side. From the broader market space, let's just look at some names. So when India Bull Real Estate is doing well, it's up about 4%, 97 rupees for India Bulls. Okay, I've been told that Jyotivardhan is back with us. Jyoti, can you just again say, are you surprised by this rally because of the strong flows that we are seeing globally?
Yeah, actually, given that Brexit was not an expected event, I thought once we really got Brexit, we would remain subdued for some time in the market. So I would say I'm a bit surprised at the pace at which the market really recovered all the losses which it had on the Brexit day.
Right. And as far as earnings are concerned, do you think that markets are now moving in a zone where, the earnings which is expected, even if it comes, we may actually find the markets to be quite expensive?
Yeah, I agree with you that the markets are expensive. Markets are not cheap. And so probably what we are headed for is a phase of consolidation. There are obviously two factors why, the markets have done well and they are so expensive. One is everybody's expecting a turnaround in the economy, and to that extent, people are hoping that somewhere down the line we get a very sharp jump in earnings, and people are playing for that big jump. Typically, if you see markets run up ahead of earnings actually coming, so to that extent, maybe one can say it is in line with past trend. It's just that, then the earnings have to actually come. If earnings tend not to really come, there could be disappointment in the market. The second thing is, on a relative basis, India is still looking very, very solid. Like, it's one of the few countries where growth is expected to pick up. It's one of the few countries where, current account, fiscal, inflation, everything seems to be in good stead, and probably where people are thinking of, cutting rates really. So to that extent, on a relative basis, India looks good. On an absolute basis, also the economy is recovering. Earnings hopefully have bottomed out and are starting to pick up. But to balance that, you have the fact that markets have done well in the last few months. Markets are not cheap. And to that extent, you may have a phase of consolidation.
Right. This is a classical market, or, one of the classical bull markets, which is, just not reacting to any negative news.
Yeah, so, like it did react. So when we got the Brexit, the reaction was quite sharp and markets came down. It's just that immediately after that, global markets have recovered also, so India's moved in line with that. I think, there are two reasons probably why the markets really moved up faster than what people thought, and it's in some sense like the Brexit. One has been that, okay, now the thing is, the earlier worries of a Fed hike coming through are probably now postponed. So, the Fed is probably not going to hike maybe for the rest of this year. The second is, though the Brexit event has happened, the way things are looking, there may be nothing which really pans out over the next few months. To that extent, it may be business as usual. My worry is actually, the longer this Brexit takes, the worse it may be for the economy in Britain and in Europe, because, what happens is people get into this zone where they don't want to do anything till they are sure of where things are going through. So I think business may freeze its spending, and that may be bad for the economy there. So though it sounds like a good temporary relief that nothing's happening immediately, it probably may not be as good for the economy.
Right. I just want to take up those global questions that you're raising, Mr. Jaipuria. Good morning. This is Anindya from the Delhi studio. I would bet on Jyotivardhan Jaipuria's gut instinct. If he felt that Brexit and Rexit are bad for the markets, and then he is surprised that it didn't really turn out to be bad, I'm assuming that in 2 to 3 months it will pan out like that.
Yeah, see, there are 2-3 things. One is, I'm quite optimistic on the domestic economy improving and earnings coming through. Yeah. And given that, I've been very skeptical, because for the last 5 years, market has been that second half will be better. And through that period, I was quite skeptical. I think, this time we're actually going to get an earnings improvement. So to that extent, my view was that the domestic factors are in favor of markets doing well. It is the global factors which may drag down, the markets really. And, that view for me has not really changed, that, probably global factors will continue to be a bit of negative for the market. And it's going to be the India factors which are going to be the positives.
So I'm talking about the timing of it, because if let's say the global factors had panned out right now, and the markets had gone down, and liquidity had vanished, and the markets had gone down right now, then we would have seen cheaper prices in the Indian markets. And when, as you said, that I was reading an interview that you gave us, where you said that this would probably be the best year for corporate earnings. To FY 16-17 is going to be the best year for corporate earnings. And if that had come, we would have got cheaper prices and we would have seen a better return. But if now, when corporate earnings come in, domestic corporate earnings come out to be good, but that's the time when liquidity drives out because of global factors, then that's a bit of a problem, isn't it?
Yeah, sure it is. But, what we have to also remember is most of the time, markets tend to factor some of this in advance. So there'll probably be a phase where, global markets start to go down. And India will be part of that, markets where they go down. But, if we look at again a 6-month period, what it may mean is that we get earnings actually coming through, but we get markets doing nothing. And so to some extent, the valuations get cheaper, because the market has really done nothing in a phase where, earnings have improved. Yeah, which will be a good thing, that you can, buy stuff cheaper.
Jyotivardhan Jaipuria, I was also reading your latest interview where you said that you are betting on the domestic story, as you're telling us here. Now, the traditional domestic story, which is not export-led, would essentially be auto, and perhaps the slightly mid-cap areas where I know you bet big on textiles. Could you just take us through that story?
Yeah, so, like if we think of domestic India, it's not done well for quite some time. And if we see the last few years, it's been the exporters, the IT and the pharma pack, which have really led the market. I think that is changing. Domestic India is starting to do well. And they're probably, I'm still, more bullish on the consumption side than on the investment side. So if we go in consumption, one is, the urban consumption, the other is rural consumption. So urban consumption has got two drivers just now, apart from, there's this demographics, which is like a overlaying long-term theme. But in the immediate term, you've got the pay commission, which is going to help you. Second is interest rates have come down. So combination of these are probably going to help your urban consumption. Second is the rural consumption, which is done badly for the last, 2 years. that is probably changing. On the minor side, what has happened is the MSP price increases are slightly higher than what you've seen over the last 2-3 years.
Yeah.
So to that extent, that's a bit of positive. But I think the big positive comes with a normal monsoon, because then you'll see more crop coming up, and the kharif crop will be much better. So how do you play this in terms of sectors? Autos is one of them, and it's the four-wheelers for the urban areas, the two-wheelers for the rural area. So autos would be one thing to play. There'll probably be more house building activity. So, the way I would play that is through the cement names, and, that's something which I'm quite bullish on.
I'm going to interrupt you there, and I just want a little bit more granularity on that house building thing that you're saying. Again, from your previous interviews, it appears that you believe that the 7th pay commission, pay commissions in the past have led to people going and buying homes. But, something that has happened in the previous pay commissions is that you got huge arrears. The pay commission in the previous pay commission was from 1st January 2006, but the money was paid out sometime in September 2008. So you got almost 2.5 years of arrears, which was a huge amount. This time the arrears are low.
Correct. I totally agree with you that arrears this time are low. So the impact which was there on the previous 2 pay commissions, the impact may not be as magnified this year, because the arrears are not going to be as high. But at the same time, what you'll have is the 2 things which happen. One is you get an increase in your salary, and that is like a sustainable increase, right? What you can see is, okay, my salary's gone up by whatever 25%, and then this is 25% coming forever. The second is interest rates have come down. So it becomes a combination of these, because for most people it is what is my EMI and what is the EMI as a percentage of what is my base. So there are these 2 factors which start to help, which start to play out into the housing story.
So again, what about the fact that there's such huge inventory in housing? I know you said that you want to play it through cement, but if there's such a huge inventory in housing, people might go and buy it, but cement won't be used. Perhaps they will be repainted, so perhaps there'll be paint.
Yeah, see, there is inventory, but what we have is a lot of builders have actually, stopped the building. So it's not like there are finished flats, but a lot of people, what they did was, as the demand was not picking up, they went slow on the construction. So that phase, and it's been a battle between, in some sense, I call it the battle between the builders and the buyers, because the builders don't want to reduce price, whereas, the buyers are just wanting a lower price, because what we are seeing is the demand not there, whereas the supply seems to be quite large. And that battle, I think, will continue to play out. Probably as the demand picks up, the builder may think that, okay, now I don't need to cut the prices, but maybe at some point we see a bit of, price correction also coming in, or they give some discounts to stimulate that demand. So, it's partly not just the inventory which is totally built in, but there's a lot of half-built inventory which is there, which probably will start getting completed.
All right. When it comes to, I was asking you about textiles and apparel, which I understand is one of the things that you have always spoken about. If you could just tell our viewers how to choose what to invest in. Except, of course, other than, of course, giving you money to invest on their behalf.
Yeah, so, in in textile, I just like, it's a very wide sector. So there are 2 areas which I like. One is the domestic branded apparel. So that is, people buying more branded, and that's a play on the domestic consumption theory. As people get richer, they want to upgrade to brands which they can believe, or which, it just becomes like a consumer thing that I want to buy a branded apparel. So that's one area which I like. The other part is I like the export story, and in exports it's probably, export of fabric, export of towels. That's the sort of thing which I like. So, that is the export story. It's not to do with India, but there, there are lots of companies now which are becoming the outsourcing hub for the, large global retail companies. And this is something which can secularly do well. This is picking up because, India's got a little more competitive versus, its neighbors like Bangladesh because of the currency depreciation, and partly because in countries like Bangladesh, you're getting to see, more stringent labor norms are being put in now, so the cost of manufacturing has gone up.
All right, let me ask you about the rural demand. We've done a bit of the urban part. Rural demand, of course, the part of it would be not directly consumption, but productive consumption in the sense of tractors, fertilizers. Do you think that it's worth buying those companies?
Yeah, so like what I would play the rural demand through would be one is tractors, and then you have to look at companies which make tractors per se, and look at the mix of how much is tractors as a percentage of sales. Yeah. And the second is agrochemicals. Okay. So I like the agrochemical sector. There are lots of good companies which are done well, which will start seeing demand pick up because of the monsoons. Last 2 years the demand was a bit constrained, and so that's one sector which will do well also. So there are these two ways which I really play the rural demand story.
So when it comes to agrochemicals, there are reports that China now is not finding that much domestic demand and is likely to start dumping agrochemicals in India. Is that a risk that you would take into account?
Yeah, so with every chemical, in fact, the risk is China, and that's true in general with every commodity. What we've seen is, to some extent, in chemicals in general, there's been a bit of slowdown coming from China, partly because, they've become a little more stringent on the pollution norms. Now, whether that is like a thing which is a secular thing and they'll be stringent on pollution throughout, or it's more linked to some of the myths which they're having in a few months, and then once that goes away, they'll, come back on pollution, is something which even I don't know. But in agrochemical, what you have is, here you'll have a situation where distribution network is also important, and to that extent, some of these companies have some sort of inbuilt advantage. If China dumps in a big way, the profitability will come down for them, but it will be the quantity which will pick up.
Okay, I know you're not going to talk stocks, but I'm just going to take it as an example. Let me take something like Make Money Organics, which is into various things, pigments, caustic soda, and agrochemicals, of course. This is just for our viewers, and we'll be speaking to the management today as well. That's why I'm mentioning that. But if I look at it, Make Money Organics seems to be thinking of expanding its capacity, increase its distributor network when it comes to in its agrochemical space. Is there a cause to expand capacity right now in agrochemicals?
See, of course, the whole chemical sector is broken up into many things. So, dyes, pigments, and all are a bit different from the agrochemical space.
I'm just talking about agrochemicals
what
per se.
People are doing is counting on, typically when they go for, so typically when they go into expansions, it's like, which chemical they are really looking into. And most people assume that demand will pick up, because just remember that whole capacity takes like a couple of years to come into being. And then by the time they put that into the distribution network, they have to think of what the demand scenario will be like 2.5 years later, 3 years later. And that's where people need to take these decisions on whether they want to expand now, later, and at what stage.
All right. Pankaj has a few questions before we let you go. I know we've taken up a lot of your time.
Jyoti, I just wanted to understand about the traditional consumer names as well. So something like a auto, would you be bullish on that? Would it be something that you would look at? Because these numbers which are expected today, that's the June numbers, or maybe even the next month numbers I was looking at expectation, they're not that great. Plus the base effect that they have been growing a little bit. So overall, how do you think the auto sector would do?
Okay, so I like the auto sector. What we've been playing over the last 1 year has been the four-wheelers, especially the cars. I think that car numbers won't look as good now because, like you said, the base effect. I think probably what will do well over the next 1 year is, the tractor segment, which actually has not done well over the last 18-24 months. That's where, the base is going to the reverse, where the low base is going to lead to very strong growth. So that would be one segment which I like. I think, the truck segment will still do well. The HCV, LCV segment would still do well. So these would be the two segments which I'll focus on. The monsoon will provide probably the impetus to the two-wheelers. So what you may have is a scenario where, within the auto pack, because it's such a diversified pack, that the stocks which did very well over the last 1 year may be the ones which relatively don't do as well, and the stocks which did not do well, the segments which didn't do well, like for example the tractors, that may start doing the best actually in the lot.
Going ahead, as far as the proper consumer names are concerned, so something like ITC, HUL, traditional FMCG, despite the valuation, they will still continue to grow?
I'm not very fond of these pure consumer staples which are, like you said, quite expensive. I don't think those are the names which I really want to play. There are still companies which will grow. So, in terms of growth, earnings growth will still come through. But it's just that I think at those valuations, you're not really going to make that much of a return. They probably don't outperform the market by a lot.
Right. Any view as far as primary markets are concerned? We have Mahanagar IPO listing today. Listing has happened at a stellar 30% uptick. Any view on primary markets? Overall, we've seen a revival and interest coming back over there.
Yeah, so I think the primary markets are doing well, and that is reflective of the fact that if we see even the secondary markets, the domestic retail investors played a big part in this rally over the last 2 years. And to that extent, once the domestic retail is back in the market, you typically see the primary markets do well. We've seen some issuance come out, but I think we're still not at a stage where there are lots of primary issuance which is coming up, which starts to disturb the secondary market. So I think, in general, the primary markets will do well.
Right. Jyoti, thank you so much for taking out time for us.